Welcome, 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 welcome. Today is April 14th. Having a beautiful afternoon here, beautiful night here with the team. Awesome, awesome. Welcome, everybody that has made it. Starting your Forex journey can be a little bit confusing, but just understand that when you put yourself in the right state of mind, with the right environment and the right mentors, you can go a long way. So in the last video, in the last session we went over Forex psychology and a few other important kind of building blocks that you need in order to move forward. Today, we're going to get started on getting you your broker, whether that be a live account or a demo account for you to start off with, with trading, or getting you started today so you can get trading immediately. Now, guys, this is very important what we're going to go over today. A lot of these things that I'm going to go over today sometimes go over people's heads. And the reason I go over this all the time, even with my more advanced people, is because risk management is something people tend to throw out of the window when they are having success, right? So you'll have maybe a win streak of 10, 20, 30 trades in a row. And then you think that 31st trade is going to hit big again, and then it doesn't. And you tend to over leverage on those losses. So what ends up happening is that you'll be on a win streak, and then that one loss takes away 10 or 20 previous wins that you had before because you've over leveraged. So we're going to go over an array of things today that are going to pretty much make sure that if you don't make these mistakes early, later on, you have a ton of success trading in the market. So real quick, if you're trading Forex, if you like cryptocurrency, if you like even trading stocks, there's brokers that you can use for just about everything. So which broker is right for you? All depends on what you're trying to do, right? Whether you're trading binary options or you're trading just regular fiat currencies on the Forex market, or you like trading cryptocurrencies, maybe Bitcoin, Ripple, and Ethereum are more up your alley, and you like trading those highly volatile pairs, you can do so with different brokers. So you have Owanda, right? Owanda trades Forex and stocks. Hugo's Way, you can trade cryptocurrency, regular stocks, and Forex. Trader's Way, again, you can trade stocks, fiat currencies, and also commodities, guys. So if you like trading gold, copper, silver, anything along those lines, you are also able to trade it with these brokers. JFX does not have any crypto. LMFX as well. FX Choice, not quite sure. I would advise you to go through these kind of brokers right here. You can even search for other brokers that might be up your alley. I like these right here. These are some of the top Forex brokers that I like. Again, if you're trading binary options, those are going to be separate brokers. So it's going to be something like, let me go ahead and add this here, something like Race Options, right? RaceOptions.com and BinaryCent.com. So again, guys, you also have to be on the lookout for brokers that are overseas, right? Some of these brokers are overseas, not regulated, and sometimes, people are kind of wary about working with these guys. I haven't had any problems withdrawing with Hugo's Way, never had an issue. Some of these brokers will allow anywhere from 3 to 7 business days if they're going to wire the money straight into your account. Some take even longer if it's debited into your account. It can take up to 30 days to receive your money, right? Most of the time, it will not take 30 days. It will take a lot less, but just keep that in mind. Some brokers do have up to 30 days to deposit your money into your bank account. So just keep that in mind. The best way is to just do a wire transfer through these brokers. Doesn't take anything longer than 3 to 5 days. All right. So be on the lookout. I'll also send out this list of brokers on our chat. So keep on the lookout for that. Again, guys, you don't have to start with real money. It's important to kind of get a grasp of what the markets do, how volatile they are, and how you can take advantage of the markets by using a demo. Use a demo account when you first get started, because not everybody's always prepared to get right into action, right? Some people are scared, some people are kind of weary, and I definitely understand, right? You don't want to put, your last $1,000 in an account and then you blow it because you didn't know what you were doing. Start with a demo account, kind of get your feet wet and get acclimated to what the actual markets do on a day-to-day basis. Now, the only thing that is different with a demo is that you have to kind of treat the same with a live account. One is the emotions, right? If you on a demo were able to make $500, even $50 or $1,000 in your account on a demo, then it should be able to translate to a real world market. Now, the only difference between having a demo and a live account is the actual fear that you can lose money in the real account. Guys, I want you to treat a demo account just like you would treat your real money, okay? It is very important to connect that emotional distress, right? When you're down in a trade in a demo account as if you were in a live account. If you can do that and connect emotionally between a demo and a real account, you're gonna go into trading a real account and not have fear, because you're gonna go in the markets with more confidence, okay? Now, download MetaTrader 4 if you haven't already on your smartphone or tablet via the Apple Store or Google Play. MetaTrader 4 is accessible on many devices. And again, that's going to be the platform on where you trade. So keep that in mind, guys, okay? Now, we all, right, if for those that are here, right, you may have been on YouTube or you're in my mentorship Opulent Forex chat, some of you guys have never traded, some of you guys are more advanced. But for those that haven't traded, you want to understand how to make the money in the market, okay? And that is calculated by something called a pip, okay? What is a pip? A pip is a point in percentage in the market, right? This is how we calculate and count how much the market has been giving to us, either in a up direction or a down direction, right over here. In any given time frame, a market is going to move a certain amount of pips to the upside or to the downside. How you count your pips is also how you count your money. There are 3 different types of lot sizes that you can take advantage of, and you can take advantage of the smallest to the largest and any type of lot size in between, meaning that you can trade something called a nano right over here. A nano is a 0.01 in the market. It looks like 1 penny. So when you are in MetaTrader 4, you're going to enter 0.01 in your trade, right? When you enter the trade, either it's going to be a buy or a sell, whichever one you get into, right? And the way it's calculated, guys, is that it calculates by the power of 10, meaning that it multiplies by 10. So any amount that you have as a lot size gets multiplied by 10 with the amount of money you make per point in any direction. So in this example, let's say we made 100 pips in the market, right? Something similar like today, we traded EU in the market, right? We're up about 100 pips at the moment, right? And for each pip on any given trade, right, for a nano, you would make 10 cents per point. At the end of that 100 pips, you make $10 on that trade, right? Doesn't seem like a lot, doesn't sound like a whole bunch of money, but if you found $10 on the floor, I can guarantee it that you would pick it up. Next lot size is a micro. Micro looks like 10 cents in the market, right? Again, everything's multiplied by 10, which equals $1 per point, right? Per pip, right? In this example of 100 pips, we would have made $100 in the market. Does that make sense? Great. On a standard lot size, right? Standard lot size, it looks like $1 in the market. But remember, everything gets multiplied by 10. So you would actually make $10 per point. And in that example, one trade would have made you $1,000. Okay? $1,000. Now you can kind of see how, you know, three people with three different account sizes can take the same exact trade, but be able to make more or less depending on how much they can leverage in the market. So now that we understand how you can make money in the market, now it's also time to understand not to over risk in the market. Do not over leverage. Risk management to this day, for some people, even 2, 3, 5 years in, sometimes is an issue. And if you want to become a professional trader, it is important that you understand that risk management is key. That means do not overtrade, meaning that if you're a brand new trader, you should be concentrating on one pair, whether that be Great Britain pound versus the dollar, euro versus the dollar, US dollar versus the yen. Concentrate on one pair, because as soon as you start trading one pair, two pairs, three pairs, five pairs, now you're in 5, 10 different trades all at the same time. But even though you were at a 0.01 for each of those trades, now you're in 10 different trades at a 0.10, and maybe your account is not big enough for that. So it should not be the fact that you're trading over what you are able to trade, depending on how much money you have in your account. So proper risk management, guys, is 0.01, right, per every $1,000, right? That's what they recommend. Why? Because you want to only risk anywhere from 2 to 3% or even less in the market per trade. Okay. Something real quick here, guys. Right? Risk management 101. Never risk more than 5% on any trade. Same goes for when you're trading binary options, right? And same goes when you're trading MetaTrader 4. We recommend to trade in a demo until you have a good grasp on trading. Only trade your live account when you're willing to risk real money. There will be both winning and losing trades. Make sure you understand the risks of signals, meaning that I can right now shoot out a bunch of trades at you guys. Does not mean that you have to go out and take them all. Take one, take two if you feel comfortable, right? But make sure that you guys are not in 10, 15, trades at a time when you only have a limited of equity in your account. Okay? Because losing is something you are going to do. You're going to lose trades in the market, but it's only after you become consistent enough to have more winning trades than losing trades. Let me tell you something right now, guys. It doesn't matter. You can actually lose 30%, 70% of your trades and still be profitable. And let me illustrate that for you guys right here, right? Let me go ahead and put that down here, right? So let's say you took 3 trades, and in each trade you risk 10 pips, right, to make 30. So that means your stop loss is 10 pips and your take profit on that trade is 30 pips. Let's say you lose the first 2. So 2 trades lost, right? Equaling, let's say you started with a 0.01, right? You started with a 0.01, and let's say 10 pips, 0.01 is only $2, right? So that equals $2 lost. Okay, $2 lost. But then you won The last trade. You won this trade, right? You won that last trade. One trade, won. But mind you, you got 30 pips on that trade that you won on a 0.01. That equals to $3, won. You are now net $1 in profit. So yes, you can lose more than what you've won in trades. But if you are using proper risk management, guys, you will end up winning, because even though you lost 2 out of 3 trades, your risk management was only 10 pips to win 30. Okay? So very important to keep that in mind. One thing I want to go over with you guys is a trading plan. Okay? It's a trading plan. So let's go over what a proper trading plan looks like. Let's see if we can find that here. Okay. I know we have it in here somewhere. Let's go in shared media right over here. This is my group. All right. Right here. And I'm going to be sending out that that in the chat, right? So you're able to follow a proper trading plan, right, with the number of pips. So that means in 20 trades using these lot sizes with a 25 pip take profit on each one of those trades, you are able to turn a $100 account to $1,200 in 20 trades. Okay, 20 trades by being able to just put in your lot size and make that money per lot size. Okay, so I'm going to be also sending that out in our chat shortly, so you're able to take advantage of that as well. Okay, so let's go back to the notes. So it doesn't matter if you lose more than what you win if you use proper risk management. And this is where sometimes people be like, oh man, I blew my account. Damn, like what, like this is the 5th account I've blown, right? Because they're not utilizing proper risk management. If you can, guys, I can guarantee you, and this is Mike Polanco 3 years into trading, right? If you can manage proper risk management correctly, then you're able to win. Another thing I want to, that I'm going to go ahead and share with you guys here, let me go back, is our trading journal. Remember in our last session, we mentioned journaling your trades is going to be very important. Let me go ahead and see if I can go ahead and find that here for you guys. It's a trading journal. Let's see. Should be somewhere around here. There it is. Right? So here is going to be where you keep track of your wins and your losses. This is important as well, guys, because not only are you able to see where you've won, where you've lost, but you're able to see your progression as time goes on. What I also would like for you guys to do is have a trading journal where you write, okay, cool, I took GU for a buy, made X amount of money. I felt this way. The market gave me triple bottom, triple top. The market was giving me these different characteristics, because when you go back and you're looking at your journal, you're saying, I remember what GU did. It gave me a triple bottom and then broke above and whatever the case may be, right? And now you're able to take advantage, right, of what the market has to give you at 100%, okay? So keep that in mind, guys. Very, very important, right? So now that we understand proper risk management, we are going to get a little bit into some notes here that have took literally my trading to the next level, right? Just understanding these concepts, and then we're gonna go over or as a matter of fact, let's go through order types first, because I think it's important to understand, because when I call out a trade, whether that be a sell limit, buy stop, sell stop, or telling you to get in via market execution, I need you to understand what's going on so you're not lost in limbo. Okay, so let's go over that right there. So these are called limit orders. And what you want to see within each one is how the market reacts and what you want the market to do at each one of these points. And I'll show you a real life example of what that means. But let's go through this diagram first. Now, market execution, which is not here, because market execution means that if I say sell or buy via market execution, you want to go ahead and just get right into that trade. We're going to go over how to use MetaTrader 4 a little later, not now, but these are the type of orders that I would want you to put in. So in market execution, you're right into the trade, on a buy, on a sell, ready to go in whatever direction we're looking to go in. On the top left, we have a buy limit, meaning that you want the market to come from a high, hit a price, and bounce off. Okay, that's going to be on the top left. So you want that market to come down, activate your price, and bounce off. That's one of my favorite limits to put in. Sell limits as well. You want the market to come from below, go above, hit a price that you're looking for the market to reject off of, and then you want it to come down. And buy stop and sell stop are like kind of like waiting on a bus stop, right? You want price to break through, kind of pick up your order and continue driving in that direction, right? It's like a bus stop. That's what I call it, right? It picks you up, picks up the order, and continues to go in that direction with price heading up or down, depending on what you want the market to do. Let me go ahead and show you guys some examples of buy stops and sell stops. I'll show you some examples of trades that we took today and yesterday. For example, we are trading oil. I had put a buy limit right here, came down to activate, and now we are in profit, right? We're in profit 102 pips already. So that was great. And this is another example of a buy limit we set up, right? This was that break and retest right here that we were able to take advantage of right here. Boom, came back, retraced a little bit, but now we are in profit here with EU. So if you are on my team and you're eating and you're in this chat, type a $, type a 79 in the chat. I'm very happy and ecstatic that I'm able to help everyday people catch pips here in the market, and we're able to take things to the next level. So thank you guys for the support here. So this is what a buy limit would look like, right? Market comes down, activates my order, and then shoots away to the upside. Okay, so this is what a buy limit would look like. An example of a good sell limit that we had was this sell limit on USD JPY, which is the US dollar versus the yen. This was a buy limit. I wanted the market to come down and then break, use this as that support right here at this area, and it did just that. Broke below, retested, and then continued heading down. The dollar is in a very, very bearish market right now, so we want to see that continue heading down. So we call this was a total of 98 pips. So calculate it. If you had $1,000 at 10 cents, you made $98. If you went in on a standard, you made $989 in this trade. So guys, this is what we are going to be looking for when I say sell by market or buy by market. This was a sell by market execution. Market came back, almost hit our stop loss, and then came into profit, and we ate right off of that right there. And that was a total of 88 pips in the market. Guys, it's all about being patient, all about being there and present, and making sure that you are being as patient and letting the market come to you. All right. So we're going to go over some concepts and some strategies that I've been using in the last 3 years as my foundation to really take advantage. Right. So number one, right. And right now, you don't have to understand all of this because over time, we're going to go ahead and cover each one of these things. But number one is, where is your supply and demand levels, right? I just showed you, right? I just showed you where I marked up these supply and demand levels and was able to take the market in the direction that I think it's going to go in, all depending on the supply and demand levels, right? Market left this level, came back to this level that I had drawn out down here, and then I saw that the market reacted again down to the downside. And these are called key levels, right? These key levels are levels that the banks draw out where you're going to see high levels of rejection. So you know that when the market breaks through those high levels of rejection, meaning that the market could have came down on a level, broke through, and now is looking to retest. These are the levels that I want you guys to draw up, and we're going to go ahead and go through some of these examples in future webinars. Okay. News. Understand that news is very important, guys, especially now. We are in the midst of the coronavirus, in the midst of everything happening all at once. You know, food prices are going up, unemployment rate is going up. All of this news affects us very, very much, okay? And where you want to go to take advantage of that is forexfactory.com. Write this down. Forexfactory.com is going to be where you're going to get all of your news. All of this is news. So different news that affects different pairs. So today, all day, we had G7 meetings. These meetings are where all the major countries come together to kind of see what's going on with everybody, you know, where the economies are and things like that. Where these institutions are and influential global policies are made. Okay, so these policies that are being agreed to or disagreed to by these nations are going to be important to listen to because they might affect any given economy. Now, what you want to look for, guys, is these red folders. Okay, you see these red folders. Now, what I do is I filter them right here on the top right. I filter them by just paying attention to red folders, because yellow folders don't really move the market. Red folders do. So what's going to happen is that it's going to tell you what the forecast is, what they think is going to happen for these things. See, like we had Trump speak. Let's see what happened, right? An event held, press conference about the coronavirus in Washington, D.C. You know, and then you can go through each one, and it's going to tell you a detailed thing of what exactly they're going to be looking for, right? This is going to be a change in total volume of sales of retail levels, right? Which I would presume are very low because everything is closed, right? So this is going to be very important news tomorrow at 8:30. So we're going to be able to take advantage of that news when it happens. Usually, there's some people that do not trade news. So only like really, I would, if you're beginning and you have no idea what you're doing yet, and you're trading in the markets, I would stay away from news, because news makes the market very volatile. Okay, it makes the market very volatile. So you want to make sure that you're not in maybe the wrong direction when news hits and then moves the market in a significant way in a certain direction. Now, one thing I've always said about news is that news always helps the market move in the direction it was going to move anyway. All right. Keep that in mind. Not all the time, but sometimes news just helps push. Like if you already have bullish sentiment, bullish means going up, right? Or bearish sentiment going down. If you already have bullish sentiment going up for a certain pair and the news is positive, right? Let's say unemployment goes down, right? It goes from 6.5 million to 3 million, right? Once this thing goes away. Now that's going to be positive news for the US dollar. And then we're going to want to see dollar, anything trading against the dollar going down, and then US pairs going up, right? Like USD JPY continuing up, or Euro USD maybe going down if it's good news for US dollars. Okay, so you want to make sure that you are paying attention to when news comes out and being vigilant, because you do not want to get caught in the middle of no man's land if you're in a trade. So keep that in mind. Dollar pairs are very important. Understanding where the dollar is, guys, is very important. If you are in trading view, you want to look for, when you're in charts, the DXY. DXY here on the top left, you want to go ahead and just go ahead and press, type in DXY. That is going to be the dollar. Okay, so this is how the dollar is moving right now. As you can see, it's very bearish, continuing to move downward. And I would think, and from what I've seen, right, from what I've seen, the dollar is going to continue being bearish, right? This is my just quick analysis of the market. I want to see the dollar continue being bearish, just because of all the horrible negative news with the dollar. So dollar is going to determine the strength of every other pair, right? The dollar is moving down. That means everything against the dollar, like the euro, is moving up. You see how it's doing the complete opposite? Low impulse move, right? Low impulse move, retracement, impulse move, retracement, impulse move, right? DXY, let's go back. High, impulse move, retracement, impulse move, little retracement, impulse move. So it's doing the same exact thing, but just the opposite, right? And then pairs that are doing, like pairs that are dominant with the dollar, like USD JPY, are doing the same exact thing, going down. So understanding these correlations are going to help you pick the right bias in the market. You do not want to be selling anything if the dollar is also going, you don't want to be selling anything that is going for the dollar if the dollar is going up, because the dollar is going up, not down, you know? So just keep in mind that this is very important to understanding where the market is going next, okay? So very important. Understanding correlating pairs, which we just went over. We also have some correlating pairs here in the Telegram. Let's look over what that means. Understand that everything correlates, right? Again, if the euro is going up, then that means anything against it is going down. But then they also have correlations where if two pairs are going up, then you have very volatile pairs also going up even faster and with more momentum. So identifying the strength of these pairs are also going to be important, because then you'll know where momentum is going, right? You'll know, okay, cool, euro, the dollar, let's say you're identifying what's happening in the market. You're saying, okay, cool, the dollar is continuing to be bearish. So we're looking for euro USD to go up. But if the yen is also very powerful, then that means that euro JPY is going to go up even faster. So understanding these pairs, and I'm also going to be throwing that in the in our chat, just so you guys can get a good understanding of what correlating pairs are, which pairs to look after. And again, all this is, guys, is an abbreviation of what it is. Euro USD is euro versus the US dollar. US dollar versus the Japanese yen, euro versus the Japanese yen, and so on and so forth. NZD is the New Zealand dollar, Great Britain pound, GBP. AUD is the Australian dollar. CAD is obviously the Canadian dollar, and so on and so forth. Chef is the Swiss franc. All right, Swiss franc is the chef. So keep that in mind, guys. Write that down. Note takers are money makers. Awesome. Draw out trends and channels. Number 5, draw out trends and channels if that helps you identify the trend. Some people need to draw it out. It's okay. Draw it out. Use your tools. In TradingView, guys, you have tools here on the left-hand side. These tools allow you, right, if you wanted to draw a channel, these tools allow you to draw out these channels, right? You see this channel, boom, came down, gave you your downtrend right here. You can draw trends, you can draw lines, you can draw anything that is going to help you see the market in a certain way. So that's going to be very cool and important as your trading journey goes on. You're going to want to start learning how to use these tools right here, you know, drawing trends, drawing horizontal lines, drawing rectangles that are going to allow you to draw maybe zones that are going to help you identify where the market wants to go next. That's going to be very important. Okay. Back to our notes. Nope, not this. Where'd I put these notes? There we go. All right. Looking for major price patterns. You remember last time I had said price patterns are going to be very, very important. And I have a cheat sheet for that. All right. Identifying these patterns are going to be important. The 3 that I find most important here are going to be head and shoulders, inverted head and shoulders, double bottoms, double tops, triple tops, and triple bottoms. It's going to be these 6. These 6 have been my bread and butter. Anybody can tell you that has been trading with me for a long time that I use these to my advantage to identify when the market wants to go in a direction. Okay, so we're going to go over these in a whole nother webinar. We're going to go over inverted head and shoulders and heads and shoulders, double bottoms, double tops, and what exactly I'm looking for. And we'll get into how to get into trades and things like that. We're not there yet, but we will be. Okay. Identifying MACD, right? TDI, divergence. Divergence is going to be something else as well. Understanding divergence is going to be important. We also have some notes on divergent types. So we're going to be going over that in the future. We'll go over everything that pertains to divergence and how to identify it. These are going to be one of the 6 confirmations that I like looking for to get into a trade or to see a reversal in momentum. Usually you get a move from up from a high to a low. Market gives you divergence, identifying that the market now wants to turn around. So very good to understand, and we'll go over that in the future. Again, understanding fibs, how to mark those up. We're gonna go over that as well. Candlesticks. The candlesticks that I want you guys to take a look at are going to be railroads, 3 white soldiers, 3 black crows, hammer candles, evening and morning star formations. What I want you guys to do is I want you guys to Google this. I also have a ton of candlestick stuff that I can send you. You guys can go over what those candlesticks mean. Usually these candlesticks will only show up in a either in a trend, or they'll show up at support and resistance, which again are these support and demand key levels. Okay. All right. Now, what are you trading and at what time are you trading it? It's important, guys, to understand that there's only should be certain times that you're trading. If you're trading USD pairs, okay, you should only be trading from 7 to 10 a.m. That is called New York session. That's 7 to 10 a.m. Now, if you're trading London session, kill zone is from 2 to 4 a.m. If you like to stay up, sometimes like I do, you can trade London session, but what are you trading and at what time are you trading it? You should not be looking for any Euro, GBP trades at 3 in the afternoon. That is a no-no. No, no, no. No, 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 no. You should not be trading it. Only trade these pairs at the time of this session. So if you're trading USD pairs, USD CAD, anything against the dollar, right? You can trade Euro USD at 7 in the morning because the secondary pair is US. Okay, so you can kind of trade what is given to you at that kill zone, right? If it doesn't give you a setup, don't trade, right? You don't have to trade every single day. If it does not give you the setup, don't trade. Guys, last three things, and a couple of those things you're gonna have to learn, right, as time goes on. But these are the foundations that really gave me the wings that I have right now within Forex. Is we get paid to wait, and it sounds so simple, but you get paid to wait for a break and a retest, right? Again, we got paid here on this because we waited for a break, right? This acted as this right here. Let me go ahead and get this out of here just so you guys can see, right? This zone right here acted as support. When it broke through, it then acted as resistance, 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 and then came down. So you want to see how these zones right here act like resistance and then act as support, right? Support, then resistance. So identifying that is going to be one of the number one things that are going to allow you to get paid within the market. Identifying that you have to wait, sit on your hands, and let the market come to you, very important. All right. Understanding order blocks, that's going to be something a little more advanced, and we'll get there as the time goes on. I just want you guys to understand that these are what you want to understand, and then we'll go more in depth on the charts on our next session. Understanding weekly, and not to mention monthly, weekly, and daily wicks, meaning you want to see what this market is doing on a monthly level, right? Each one of these represents 1 month. Each one of these candlesticks represents 1 month. But these are this is where the market is going to allow you to see the market at a macro level. Once you understand what is happening on the macro level, then you can go down into the weekly, then you can go down into the daily, then you can go down into the 4 hour, and then get more, like it's like coming into a microscope, right? It's like being able to go in and then go into a microscope, and every time you go into a lower time frame, it's just getting closer and closer and closer, right? All the way to the 5 minute, all the way to the 1 minute, right? You're able to kind of see what's happening at a micro level at this level, all right? So keep in mind, very important to understand these levels. Guys, that was it. This was a training that I've put together just to have you guys understand exactly what you guys need to set up and understand when starting to trade Forex. Guys, it is 10 minutes to 8. If you guys want to get access to our education platform, I'm going to be sending out on the chat. And if you're on YouTube, I'm also going to be putting the link below so you can take advantage of the education via our presentations every single day at 8 p.m. Oh, no, I'm sorry, Sunday through Friday at 8 p.m. You're able to kind of check out the education platform that we have to offer. Again, guys, my name is Mike. It's my pleasure to serve you guys and go through this information so you guys can grow as a trader. And I'll see you guys on the next episode.